Let's turn now to our very own Jared Blikre over at the Wi-Fi Interactive for an update on markets and what's moving them. Jared.
That's right. We were just taking a look at the bond market, not moving much today. Looking at the equities market, a lot of times we see what's called FOMC drift, and that typically starts the Tuesday before the meeting or before the announcement, and it'd be a little bit earlier for that to happen in today's cycle. Nevertheless, we're looking at some gains here, and let me just take a look at the S&P 500. Now, we did just get an article by Nick Timiraos over at the Wall Street Journal. By the way, this is the 10-year T-note yield. I promised you the S&P 500. There we go. This is a year-to-date look. We just got that article by Nick Timiraos at the Wall Street Journal, aka the Fed Whisperer, kind of pointing out what we might expect from tomorrow and the next day. That is going to be 50 basis point hike in December. No real surprises there, but I wanted to read one key line from the report, and this has to do with the Fed potentially pivoting into a recession and maybe just pouring some cold water on that. Normally, the Fed would cut rates as soon as it thinks the economy is entering a recession, but this one analyst thinks that investors are in for a surprise next year when the Fed does not do that. People don't understand this will be a very different recession. This is one where they'll be willing to deliberately create a recession, and they're not going to cut right away. So expectations for everybody holding out for that pivot next year maybe not going to surface. Now, I want to pivot to the retail sector, which has not been buying stocks as aggressively as they have for the first part of this year. And maybe that has to do with some of the losses that have been stacking up. Van de Track has estimated some of these losses in Tesla, for instance, retail losses of $78.3 billion, Apple $39 billion, AMD $27.9 billion. The list goes on. So a total of $350 billion. Now, traders might be wising up a little bit and not, I guess, spending as much money this year as they did last year, because you take a look at some of the tickers in our meme heat map, how they performed over the last 2 years. A lot of retail traders simply got burned last year, and you got to think that if they're still trading it out, slugging it out in the depths, in the trenches here during this year, maybe they're onto something. Nevertheless, here's the meme stocks over the last 2 years. I can show you year to date as well. Bottom line here, retail traders not the force that they have been coming into this Fed meeting, but as I said, expectations probably not as they should be either for the investment population at large here, guys.
Indeed, certainly a lot of noise out there, investors trying to make sense of it all. Thanks for breaking that down for us, our very own Jared Blikre.